Hi, everyone. I'm Greg Benner, and thank you for clicking play here and joining me. Today is March 7th, 2023, and I will be reviewing the February Las Vegas real estate market data with you all, as well as some national data as well to put everything in perspective. So let's jump right into it here. Let's look at the Las Vegas data, shall we? Okay, so here we are with the February 2023 Las Vegas real estate data. So let's look at number of units sold, 1,722 compared to 1,325 the previous month. 1 year ago in February, 2,514. That is a 30% increase of single-family homes sold month over month, February from January, and we're down 31.5% from a year ago. Let's look at the median price of units sold. That is approximately the very same as the month prior, 425,000. So that's a 0% increase or decrease. And number of available units without offers, that is what we have here on the market, 4,665 homes that are not under contract. And that is a 14.5% decrease from the prior period, 5,450. And 1 year ago, we only had 1,741, and they were flying off the shelf. I'll tell you that. But here's one of the things we can see going on here, folks, is that number of units sold is going up. Number of available units is going down. Keep that in mind right there. Keep that in mind. Let's look at median price of available units without offers, single family residential. 499,000 for February. For January, it was 480,000. And a year ago, it was 575,000. So you can see that prices are rising. They dipped some, and they are rising again. Now let's look here at number of new listings. So that is folks who are listing their homes for sale, 2,243. And January, we had 2,477. And a year ago, 2,950. So we are having a decreased level of new listings, new homes coming on the market. Let's look at our average price of new listings, 670,000. Month prior, 630,000. And a year ago, 650,000. So we are up. Median price of new listings here, 470, 456, and 465, which leaves us months of effective inventory. Months of inventory, that would be how long it would take to, if we were selling this many units per month, get through our 4,665 level right here of units that are on the market. It would take 2.7 months. Previous month, January, 4.1%. And we were rated 4.1% for about 3 months there, pretty steadily. And gosh, look what it was a year ago, huh? 0.7 months. Wow. Isn't that something? Goodness gracious. Let's look at time on the market, 0 to 30 days. So that has risen for the first time in a while. In January, it was 38.5%, and a year ago, of course, 77%. And what that means is the percentage of homes that were for sale, how many were under contract within the first 30 days of hitting the market, and 41.1% of those were sold in the first 30 days compared to the prior month where it was 38.5. So that's the first time that has risen in a while here. Let's see, we've got time on market, 31 to 60 days. That has decreased. Time on market, 61 to 90 days, that has decreased. And time on market, 91 to 120 has gone up 1 percentage point. And 120 plus days, that has risen about 3.2 percentage points. So we have that information right there. Let's take a look here at our Altos page, okay? Okay, so here we are with our Altos research look, median list price. So you can see how last year in May, June, we peaked out. April, May, June in here, we kind of peaked out and have been sliding down. But now we're taking another bit of a turn up here as we enter the spring buying and selling season. So let's see here. Where's the last one? Okay. So 499.9 to 500,000. We're kind of in that range there. Looks like we got down to 484,000 being our low point right in there on our 7-day average. And we're back up to 500,000 now. So that's a little bit rising on that median list price. Okay, so we've got the median days on the market right here. And we are at 105 median days on the market for as of March 3rd, which is, what is that, 3.5 months there, almost exactly. And we were up to 112 a couple weeks ago. So we are coming on down there. Things are moving a little bit quicker off the market, it looks like. Alrighty, so here we are with properties with price decreases. And gosh, that is heading down pretty quick there, isn't it? We're down to, on the 7-day average I'm going by, that's a little bit more reflective of what's going on right now. On the 7-day average, we've got approximately 47% of properties have had a price decrease. Back in November, we were all the way up at 64%. So we have come on down here quite a bit, as you can see. Properties with price decreases. Let's take a look here at our inventory levels. Now, Altos Research is going to have different inventory levels than LVR, and they'll have different inventory levels than CoreLogic and Zillow. Everybody has their own little idiosyncrasies and different ways that they keep the data. So keep that in mind, please. Here on the 7-day average of inventory, and this is Las Vegas market. This is the Las Vegas market. This is not national information. Inventory is, as you can see, steadily down here. We went steadily up, and the roller coaster is coming steadily down here. So, golly, all the way at the peak here, 57.49 down to 31.47. So we're getting down there. And what does that reflect? That means that less inventory is going to keep those prices elevated up a bit here. So what's going to happen with that? That's one of the things that is keeping the prices from coming down. And we are at, as a matter of fact, we're at 7.03% today, according to Mortgage News Daily. 7.03 on the 30-year fixed rate mortgage, and that is for excellent credit. So someone with a non-excellent credit, non-perfect credit, is going to have an even higher rate. Let's take a look at the market action index right here. And we can see that has popped up slightly, and back into a little bit further into the seller's market right here. That's due to inventory levels, which are creating the opposite of an abundance of homes on the market. So here is our market action index that we just looked at on that little gas gauge up there, as I call it. We're at, that appears to be the 90-day average up there. Right now on the 7-day average, we're at 44.63. So the little commentary that they have here at the bottom of the screen, I'll highlight in blue there. home sales continue to outstrip supply, and the market action index has been moving higher for several weeks. This is a seller's market, so watch for upward pricing pressure in the near future if the trend continues. And we'll take a look in a little bit here at what Black Knight's forecast is, and or Zillow's forecast for pricing in the next year here. Okay, so Altos Research says we're definitely in a seller's market, and it's those inventory levels that are keeping us down. One would think that those interest rates are going to pop those prices down, but it's a simple supply and demand type of situation. So let's move on here. Okay, folks, so there's that pertinent data to Las Vegas. Now, if we look at the Black Knight Monthly Mortgage Monitor, we're going to see that in an article they had posted, half of all first lien mortgages have an interest rate of 3.5% or less. So that's half of all outstanding mortgages have an interest rate of 3.5% or lower. Isn't that something? And then 2/3 of all outstanding mortgages are at 4% or lower. So sellers are holding on to those interest rates and listing their houses at a much lower rate. That's one of the things that comes from that. Let's take a look at this chart here and see what we've got. Okay, here's a quick one to take a look at. Cash out, refinance withdrawals. So folks who have taken money out of their home's equity, and the blue lines, the blue bars here are total equity withdrawn via cash out refis. And then this black solid line here is the average cash out withdrawal per borrower. So gosh, look where we are now here, huh? My goodness, looks like this goes up to the fourth quarter of 22. Of course, we don't have the current quarter we're in here, but we're up at about 95,000, which is the highest rate that folks are taking money out of their homes since going back here as far as this shows, back to 2005. So I hope that doesn't get a lot of people in trouble here going forward. Okay, so now here's an interesting one that we can take a look at. Payment to income ratio versus 30-year rates. So the payment to income ratio is the blue line here and goes with the left axis over here. So how much of your income is going to a payment. And the green line here is the 30-year fixed rate mortgage according to Freddie Mac. And those percentage rates are over here on the right-hand column. So, and this goes back all the way to 77. And one of the interesting things I saw the other day on another chart I don't have right now in front of me, in 1972, it went back to with mortgage rates. And it looked like to me that a 20-year period from about 72 to about 92, rates did not go below 8%. Isn't that something? For about a 20-year period there, rates did not go below 8%. And if you look all the way back here, back in 81, gosh, we're at an 18%, about 18.5% mortgage rate back here. And people were still buying and selling homes. It still happened. And that's how we got ourselves out of the inflation mess we were in back then. That the president took over in 81 and was handed that. And they quickly raised the rates in order to put out that fire. And it did work. And rates came back down again, as you can see here, steadily from there. But it took getting those rates up to, well, the mortgage rates anyway. This doesn't reflect the Fed, but they're tied together, of course. 18% rates. And for about a 20-year span, rates did not go below 8%. So here we are right now. The payment to income ratio is 33.2%. Back in 07 or so, we were at 34%. And you can see where we were here as we went along. Gosh, about 55% back there with the 18% rates. So we're at about 33.2, and the rates are a little bit higher than this right now. They're at, like I said earlier today, they're at 7.03% on average for a 30-year fixed with excellent credit. Very quickly, number of new listings coming on the market here. Back from early 2017, the comparison. So we're down 25% from that. This was, of course, the heyday of the COVID lockdowns, whatever you call them. Right there. Okay. Inventory of homes listed for sale. So what Black Knight's article referenced here also was that 90% of the major markets in the United States have seen home inventory decreases, and only 10% of national markets have seen a inventory increase. So as we look here, here is the zero line where things would remain the same. And that's from the 17-19 period to the same month average here, percentage change. The national is the dotted line right here. And you can see the national is down below 40%. That's inventory on a national level. And you can see here that we've got Las Vegas all the way here on this chart anyway, up at the top with a increase. That's compared to back here pre-COVID levels. So we have a increase, according to Black Knight, of inventory levels, which I guess is a good thing for us. Back on the East Coast, everything from the east side of the country looks like they are experiencing some real inventory problems, more so than the places on the western portion of the United States. So very different there. And that is very apparent in this chart here, wouldn't you say? Look at this. If we split the country down the middle here, this is annual home price growth. And this is what we've seen here. So everything on the eastern portion of the country is in the plus, and everything on the western portion of the country here is in the negative. So isn't that something, how that's happened? Okay, so here is the Zillow article released March 2nd. And they had a panel of their experts. And those experts claim that, well, I'll read this sentence. The panel forecasts prices to slide at 1.6% in 2023. Growth over the following 4 years is expected to average 3.5%, equivalent to the long-term average. They go on to further say new home sales are expected to decline to near 2016 levels this year. And sales of both new and existing single-family homes are expected to slide in 2023. So they say home prices nationally should bottom out in 2023 and then return to a more normal growth rate, according to a Zillow survey of housing experts. Here's your prices to fall 1.6% through December 2023. And they say affordability challenges are still dragging down demand for homes. Starting next year, however, the panel foresees price growth picking back up at an average clip of 3.5% a year through 2027. They state the housing market is resetting, though we're seeing early signs of renewed buyer interest early this year. Prices should generally flatten out in 23, helping buyers to catch up. The sheer number of people in the first-time homebuyer age range and a lack of inventory should limit price declines. A return to more normal growth would be welcome after the roller coaster ride that home prices have been on lately. And this little chart here goes along with that. So the mean of all panelists, if we put all of their predictions together, that would be this yellow line right here. As you can see, we are right here in 2023. And the optimists, who are predicting good stuff to happen, are in the blue. And the pessimists on their panel are on this black line right here. And the actual average annual growth rate pre-bubble, 87 to 99, would be this gray line right here, which would be just a continuation coming up from 99 there, up through modern times. And you see that the all panelist prediction takes us back to that level right there in 2027. So, gosh, if we take the panelist mean here, we can see that from our starting point in 2021 prices, by 2024 rather, we should have a 9.3% increase on those prices from 21. And 25, that will go up to 13.2, 18.1, and then in 2027, prices will have grown 23.3% from this point back here in 21. So that's not too bad. And if you purchase, don't forget you get all of those tax benefits that may be available to you, including those tax refunds on all of that mortgage interest that you're paying. There's that portion right there. So there we have the look at the February data for 2023. And I hope you found that interesting and helpful. And if you did in any way at all, please click the like button here. Please subscribe. And if you have any questions, please feel free to give me a call. I'm always here to help out you folks. And I appreciate all that you do watching these videos. And I look forward to hearing from you soon. Okay, folks, have a good one. I hope to see you next month. And I hope you have a great month. Thanks. Bye-bye.